If you think you're only going to need 5% in order to purchase your first home, I hate to be the one to tell you this, but it's not going to be enough. You see, most buyers focus only on saving their down payment, but when it's all said and done, you'll have spent an additional $10,000 just on closing costs. I'm a real estate agent in Ottawa, and for the last 5 years, I've helped first-time homebuyers over-prepare for the hidden costs of purchasing a home, because I would rather you have a little bit of extra money on the side to buy some furniture and some paint than spend every single dollar that you have and feel stressed about bills for the first few months of owning your first home. For today's example, I'm going to be using the numbers on a $550,000 freehold townhome in Orléans with no condo fees. First, let's talk about your minimum down payment. For the first $500,000 of your purchase, you'll be able to put that 5% down, which is $25,000. For the remaining $50,000, you'll have to put 10% down, which is $5,000, bringing your total down payment to $30,000. Included in your down payment is your deposit, which is usually about 1 to 2% of your purchase price. This is essentially the money that you use in order to put a hold on the property so that you can do all of your due diligences and make sure that this property is the right fit for you. It has to be submitted within 24 hours of your offer being accepted, which means you want to have it in an accessible savings account. And keep in mind, this deposit is refundable if you end up deciding that the property is not the right fit for you. Second, I want to talk about CMHC insurance, which is required for first-time homebuyers putting 5% down. Although this amount is not added to our total cost in cash needed on closing, I think it's super important for you to know how this works. This is a fee that protects your lender in case you default on your mortgage payments. It's usually about 4% of your mortgage amount, which is the total purchase price less your down payment. So on a $520,000 mortgage, which is your total purchase price of $550,000 less your down payment, the total CMHC insurance is going to be $20,800. Like I said, this doesn't increase the amount of cash that you need on closing, but it will add to your monthly mortgage payments. Third, we have the Ontario Land Transfer Tax. The way this is calculated is in increments according to the purchase price of your property, but instead of boring you on how this works, I'm just going to include a calculator in the description below so that you can input your custom number and get the result. But for today's example, the total land transfer tax is going to be $7,475. I know this is a big number, but I have really good news for you. As a first-time homebuyer, you actually qualify for a $4,000 rebate. There are two ways to get this rebate. The first and best option is to file electronically, which means it is actually removed from the amount before your closing, and you only have to pay the total land transfer tax less the $4,000. But if you're not able to do it that way for some reason, you will have to pay the full amount on closing and then file to get a refund later on. For today's example, let's say you registered electronically and you were able to get your $4,000 deducted from your land transfer tax before closing. You would pay $3,475 with your closing costs. Our current total is $33,475. Fourth, we have your legal fee. This can vary according to the lawyer that you choose, but let's say you choose a lawyer that offers a fixed rate for first-time homebuyers of $1,200 plus HST, as well as a $400 disbursement fee. This will cover all of your legal work in terms of title search, communicating with your lender and the other lawyer, and making sure that you're properly registered on title. Your final lawyer fees will be about $1,800 with tax, bringing our total up to $35,283. Our next expense is going to be performing a home inspection. I highly recommend this because it will give you the opportunity to have a qualified home inspector check the property to make sure that you understand exactly what condition it's in. In Ottawa, this will cost you roughly between $500 and $600. And I do want to say that if you are purchasing a rural property, there will be some added costs because you'll want to check the septic and well, and these can cost you an additional $500 each. But for today's example, let's say you just got a home inspection and there was also a wood-burning fireplace. You decide to get a wet certificate to make sure that the fireplace is up to code, which costs you an additional $275. Your total for inspections comes to $932 with tax. Your expenses are now at $36,215. Another thing to consider is an appraisal. This is when the lender wants to confirm that the property is actually worth what you paid. Oftentimes, I will say lenders will cover this, but if ever you end up in a situation where you do have to pay for it, it could range between $300 and $700. So let's just budget for $500 to be safe. This will bring our total to $36,715. After that, you'll have to get home insurance. This is required by your lender and it will probably cost you about $1,000 to $2,000 a year. Let's say for today's example, you got an insurance premium of $115 per month, and there's also a $75 setup fee. So if you're paying the setup fee and the first months in advance, that brings your insurance total to $190. Now let's talk about property tax adjustments. Depending on the time of year when you purchase the property, the seller may have already paid the entire tax bill for the year, which means you owe them money for the percentage of time where you'll actually be living in the home for that year. To keep it simple, let's just say you moved in halfway through the year, which means you owe the seller half of their $3,200 tax bill. This, in addition to the home insurance costs, brings our total to $38,505. Okay, we are almost there, but expense number 9 is your utility setup. You'll have to register for your hydro, your gas, your water, and also your internet. And of course, these companies all have various account activation fees. We're going to budget anywhere between $30 and $60 for the utility setups, and then we'll also add $120 to get your internet installed. This will be about $258 added to the total. I will say all these costs don't necessarily have to be paid up front. A lot of them will be added on to your first bill. As a first-time homebuyer, I'm going to assume that you will not be hiring professional movers to move into your first home, which means you're going to be getting a U-Haul truck and packing your own boxes. This will cost you about $800 total. The last expense that I want to mention today is changing your locks. This is an important safety measure that you will not regret doing, and it's probably going to cost you about $300. This brings our grand total to $39,863. When you add all of these things up, you can clearly see that you need more than just your 5% down in order to purchase a property. In this example, your down payment was $30,000, but there was an additional $10,000 in closing costs that you would have had to pay up front. The goal of this video is not to scare you. I just want you to be prepared and know exactly what's going to come up along the way. With this in mind, you'll be able to save exactly the amount of money that you need so that when you get your keys, you can just be excited to be moving into your first home and not stressed out of your mind about expenses. One thing I didn't cover in this video is what your actual monthly mortgage payments would look like, and that's because it's honestly different for everyone, depending on your credit, your income, and also the loan option that you choose. However, if this video made you realize that you actually have the cash that you need in order to buy your first home, the next step is figuring out how much house you can actually afford. I work with a ton of amazing mortgage brokers that could sit down with you, no pressure, and just talk about what your options are and what your monthly mortgage payments would look like for your first home. If you think this would be helpful for you, please feel free to comment mortgage down below and I will connect you with someone that I trust. If you found this video helpful, please feel free to like it down below and maybe click the subscribe button as well. I'll see you in the next one.